Welcome to the Deep Dive. We're here to cut through the noise and get you really well informed on the topics shaping our world.
And today, we're tackling cybersecurity. It's a huge field, constantly changing, especially, with AI becoming so central.
Absolutely. Staying ahead isn't just smart, it's critical.
Yeah.
And one company that keeps coming up is Palo Alto Networks, or PANW.
Right. They're a giant in this space, always seem to be pushing the envelope against new threats.
So our mission today is to really dig into PANW. We'll look at recent reports, their earnings, what analysts are saying.
Yeah.
Basically give you the full picture.
Yeah, the goal is to understand their position, their strategy, their financial health. Think of it as a shortcut to getting up to speed on this key tech player.
Exactly. Pinpointing what actually matters for you.
Okay, so where should we start? Maybe the financials. Get a snapshot of where they stand right now.
Good idea. So the stock, PANW, recently closed at $181.56 USD. Had a decent little bump, too, up just over 3% in one day.
Yeah, saw that. A nice immediate uptick. And how does
Right.
that compare to, fair value estimates?
Well, our fair value estimate is sitting at $192.55, and our specific price target is $188.06. So some potential upside there based on those numbers.
Okay. And the range, I know it's moved around a bit.
It has. The 52-week range is between $144.15 and $210.39. So, yeah, there's been some movement, but that recent gain is positive.
But the earnings, right, that's usually where the real story is.
Yeah.
Their Q4 for fiscal 25 released August 18th. That looked pretty strong. Robust, I think was the word used.
Robust, yeah.
Yeah.
It definitely seemed to beat expectations pretty comfortably. What are the key numbers there? Anything jumped out at you?
Well, the revenue, for starters, came in at $2.5 billion for the quarter. That's 16% growth year over year. Pretty solid.
16%. Okay, that's strong momentum and profitability.
Also good. The non-GAAP diluted EPS, that's earnings per share, basically hit 95 cents. Again, better than analysts were predicting. So, yeah, solid execution all around.
And looking at the whole fiscal year, FY25, does the picture stay strong?
It does. Total revenue reached $9.2 billion. That's up 15% from the previous year. But what really caught my eye was the next-gen security, the NGS annual recurring revenue.
Oh, the recurring stuff, always key.
Exactly. That ARR grew 32% year over year, hit $5.6 billion. That's, predictable income from their advanced services. Very healthy.
And didn't they mention something about AI revenue specifically? That seems to be the hot topic everywhere.
Oh, yeah, big time. Their ARR accelerated significantly, grew more than 2.5 times compared to the previous year, reached about $545 million.
Wow, 2.5x. That's huge acceleration.
It really is. It tells you they're not just talking about AI security. They're actually, making serious money from it, capturing that demand.
That feels like more than just a number. It feels strategic, like
Yeah.
they're really executing on that AI front.
Yeah.
What about the underlying financial health, margins, cash flow?
Yeah, they hit some really interesting milestones there, too. Q4 saw their operating margins cross 30% for the first time.
30%. That's
Yeah.
impressive. Shows efficiency.
Definitely. And they kept their free cash flow margins strong, too, around 38% for the full fiscal year. That's the third year in a row they've managed that.
Right. Free cash flow is key. That's the actual cash they generate after expenses.
Yeah.
Maintaining 38% is pretty exceptional discipline.
It really is. And other areas looked good, too. Product revenue grew 19% in Q4, and over half of that, 56%, came from software. Total services up 15%.
And the RPO. The remaining performance obligation, that's like future contracted revenue, right?
Exactly. That grew 24% year over year to $15.8 billion. Highest growth they've seen in that metric in 7 quarters, even at their, massive scale.
So strong current performance, strong future pipeline. What about their guidance for next year, fiscal 26?
Looks optimistic. They're projecting NGS ARR to land somewhere between $7.1 and $7.1 billion. That's another, 27% jump?
And total revenue.
Looking at $10.475 billion to $10.525 billion, so about a 14% increase overall.
At EPS.
Non-GAAP diluted EPS projected between $3.75 and $3.85. That's a 12 to 15% increase there.
And they expect to keep that free cash flow margin high.
Yeah, forecasting 38 to 39%. So consistent performance, even though product revenue growth is expected to slow a bit, maybe low teens.
Oh, the software growth is making up for it.
Exactly. And underlying all this, they've got a strong net cash position, almost $2.5 billion, and very little debt. That debt-to-equity ratio is tiny, just 0.11. Solid foundation.
Okay, so financials look really solid, but cybersecurity is incredibly competitive. What gives PANW their edge? What's this wide economic moat analysts talk about?
Yeah, that's the million-dollar question, isn't it? The moat really comes down to their integrated platformization strategy.
Platformization sounds a bit like corporate speak. What does that actually mean for someone using their products? Why is it such an advantage?
Think of it like this. Imagine trying to secure your company with like 10 different tools from 10 different vendors. One for the firewall, one for cloud, one for endpoints. Nothing talks to each other easily. It's messy.
Right. Complex probably leaves gaps.
Exactly. PanW's idea is to bring all that into one integrated system, one dashboard, one set of policies. It simplifies things massively.
Okay, makes sense.
And here's the kicker. Once a company builds its security around that integrated platform, switching away becomes really, really hard. It's disruptive, expensive.
Ah, the switching cost.
Yeah,
Like trying to rip out your entire smart home system. Once it's all installed and connected, you're kind of locked in.
pretty much. It leads to bigger deals, longer commitments. It creates that stickiness.
So that's the platform part. What else contributes to the moat? Innovation.
Definitely. They have significant intangible assets there. They were pioneers in next-gen firewalls. They're leaders in newer areas like SACE.
SACE, Secure Access Service Edge. That's about secure remote access, right?
Yeah, basically securing connections no matter where users are.
Hmm.
And also XIM, their big security analytics platform that pulls everything together.
And now they're pushing hard into AI security too, with
Yeah.
things like Prisma Airs. How does their integrated approach help with AI specifically?
It's all about the data. Because their platform sees everything, network, cloud, endpoints, they have this incredibly rich integrated data set. They can feed that into their AI models.
Which makes the AI smarter, presumably. Better threat detection.
Exactly. It creates this feedback loop that's hard for competitors who might only see pieces of the puzzle to replicate. It allows them to build a superior defense system.
And then this all feeds into their bigger vision, defining cybersecurity for the AI era.
Right. They've even set a huge target. $15 billion in NGS ARR by fiscal 2030 shows you how confident they are in this strategy.
15 billion. That's ambitious. And it seems like acquisitions are a key part of reaching goals like that. Let's talk about CyberArk. That sounds huge.
Oh, it's massive. A proposed $25 billion deal. It's all about grabbing a big piece of the identity security market.
Identity.
Yeah.
Becoming even more critical with AI, I guess.
Mhm.
Like AI agents needing identities.
Precisely. Agentic AI, where AIs act more autonomously, creates totally new identity challenges. CyberArk is a leader there. So this deal, if it goes through, is seen as a strategic home run.
Expands their market, boosts their sales capabilities. They're even aiming for over 40% combined free cash flow margin by FY28.
Yeah, very ambitious targets for the combined company.
And besides that potential blockbuster deal, they're still innovating internally too, right? You mentioned Prisma Airs.
Yeah, their AI security platform. Also, PanOS 12.1 Orion, which has quantum readiness, built-in thinking way ahead.
Quantum readiness. Wow.
Uh-huh. And Cortex Cloud ASPM for application security, plus expanding XIM with new modules like exposure management, using all that data proactively.
There was also a leadership change, wasn't there? The founders stepping down as CTO.
Yeah, Nir Zuk retired as CTO, but Lee Clarish, who's been the chief product officer for ages, is stepping into the CTO role. So it feels like a very natural transition, ensuring that tech vision continues.
Okay. Now, no company's perfect. There are always concerns. We should probably touch on those for a balanced view. What are investors worried about? Deferred payments affecting cash flow.
That's one, yeah. The way some deals are structured impacts immediate free cash flow. The company acknowledges this is a transition they're kind of absorbing.
But they expect it to improve.
They do. They see better visibility and some relief on that front within the next couple of years. And crucially, they're still guiding to those really high 38, 39% adjusted free cash flow margins for FY26. So the underlying generation is still strong.
Got it. What about the hardware side? Growth there seems a bit slower.
It is, yeah, maybe low teens growth, but you have to see it in context.
Yeah.
The software parts of their business, like SaaS, virtual firewalls, are growing really fast and driving the overall product revenue growth into double digits. It's more of a strategic shift towards software.
Makes sense. And the CyberArk deal, as big as it is,
Yeah.
large acquisitions always have integration risks, right?
Absolutely. Merging large companies, cultures, systems, it's never simple. But PanW seems confident about the strategic fit and The cultural alignment with CyberArk, that helps, but risk is always there.
Anything else? I saw a note about their manufacturing.
Oh, yeah, interesting point. They have a low capital model, and they transition manufacturing to a contract facility in Texas.
Hmm.
Apparently, they're the only major pure-play cybersecurity firm assembling all their hardware stateside at scale now.
Huh. Interesting detail. Okay, so let's try and tie this all together. Valuation analyst views. Where does that leave us?
Well, like you said, stocks around $182.93. Our fair value is $192.17. Our target $188.06. Suggests some, moderate potential upside from here based on our analysis.
And the broader analyst community.
Their average target over the last 6 months is higher, around $217.12, but there's a huge range in individual targets. Some are down near $185, others are way up near $500.
Wow, 496 Texers was the highest. That's quite a spread. Shows different levels of optimism, I guess.
Definitely reflects different views on just how big this platform strategy and AI leadership can get.
So if you boil down the bull case,
Mm.
what are the main points?
Bulls love the platform strategy, the stickiness it creates. They point to the explosive NGS and AI growth, the really strong financials, especially free cash flow. And they see CyberArk as transformative, locking down the identity piece. Plus, just general leadership in AI-driven security.
Okay. And the bears. What are their counterarguments?
Bears worry about pulling off that huge CyberArk integration smoothly. They focus on the near-term cash flow visibility issues from deferred payments, the slower hardware growth.
And maybe the high expectations already baked into the price.
Exactly. High valuation means less room for error. And of course, the constant pressure from competitors in a really tough, fast-moving market. It's an arms race.
Makes sense. So weighing it all up, our overall stance is still pretty positive.
Yeah, leaning positive. The demand for what they do just keeps growing. Their innovation pipeline looks strong, and the strategic moves, particularly CyberArk, seem well aimed. It positions them well for long-term growth, despite the risks.
Okay, so quick recap then. Palo Alto Networks, showing strong financials, has a powerful competitive advantage with its integrated platform, really leaning into AI and making big bets like CyberArk to own more of the security landscape.
That sums it up pretty well. Solid performance, clear strategy, expanding moat.
Which leads us to a final thought for you, the listener. As AI keeps making the digital world vastly more complex, constantly creating new ways for things to go wrong, how does cybersecurity itself need to change? And what will it really take for companies like PANW to secure our digital lives over the next 10 years?
It's a huge question. Definitely something to think about. Hopefully, this deep dive gave you a solid understanding of one of the key players trying to answer it.
We hope so too. If you found this breakdown useful, please do subscribe to the channel and hit that notification bell. It really helps us keep bringing you these deep dives.
Yeah, your support means a lot.
Thanks for tuning in.